Here's my 5-year plan for UK in 2025. Imagine waking up on a Monday morning and realizing you don't have to go to work. Your bills are covered, your food is paid for, your lifestyle is secured, all because your investments are working harder than you ever did. Sounds like a fantasy? Well, today we're breaking down whether your investments can actually replace your salary. And I'll show you a 5-year plan step by step that any UK investor in 2025 can start working on right now. By the end of this video, you'll know the exact strategies, the numbers, and the realistic risks involved. And who knows, this could be the plan that frees you from the paycheck cycle forever. Why this matters in 2025? The UK cost of living crisis hasn't disappeared. Energy bills, housing, and food inflation are still biting into paychecks. Average salaries are struggling to keep up with inflation. Traditional pensions feel outdated. Many workers aren't confident their pension will cover them. The question is, can we build an investment strategy that doesn't just grow wealth for retirement, but actually replaces your monthly salary in the next 5 years? This is where the 5-year plan comes in. It's not about gambling on crypto or chasing meme stocks. It's about combining smart, diversified strategies with discipline and consistency. Defining the goal. Before we can replace a salary, we need to define what salary means. Average UK full-time salary in 2025, around £35,000 per year, after tax, roughly £2,200 per month. That's our target, £2,200 of passive income per month from investments. Can it be done in 5 years? Yes, but only with the right approach and realistic expectations. We'll walk through a case study. Let's assume someone starts with £10,000 saved and can invest £1,000 per month consistently. Year 1, laying the foundation. 1. Build the safety net first. Before investing aggressively, have 3 to 6 months of living expenses in cash. This prevents panic selling when markets dip. 2. Use the tax shelters, stocks and shares, ISA. £20,000 per year allowance, tax-free growth and withdrawals. SIP, self-invested personal pension, adds tax relief but locked until retirement age. 3. Investment mix. Start with global index funds, FTSE All-World S&P 500 tracker. Add a UK dividend ETF for income. Small allocation, 5 to 10% to growth sectors, AI, renewable energy, tech. 4. Expected growth. Historically, 6 to 8% annual return for diversified index funds. Reinvest all dividends in year 1. The goal isn't income yet, it's compounding. By the end of year 1, £10,000 starting capital plus £12,000 invested equals £22,000. With growth, 7%, that is £23,500. Year 2, building momentum. Increase monthly investments if possible. Side hustles, promotions, cutting expenses. Begin focusing on dividend-paying stocks or ETFs. Target dividend yield, 3 to 4% portfolio average. By year 2, contributions, £12,000, total invested, £35,500. Growth plus dividends reinvested, £38,000. Dividends at 3% yield, £1,140 reinvested. This is still far from replacing income, but momentum is building. Year 3, income strategy kicks in. Now the focus shifts toward income streams. 1. Dividends. Increase allocation to high-yield UK stocks, utilities, banks, REITs. Use dividend reinvestment plans, DRIPs. 2. Alternative income assets. Property crowdfunding platforms, for example, UK REITs or fractional property investing. Peer-to-peer lending with caution. 3. Side hustle investment income. Create digital assets, ebooks, online courses, YouTube channel. These aren't traditional investments, but scale income outside salary. By year 3, portfolio value, £55,000. Dividends at 4%, £2,200 annually, about 1 month's salary already covered. Year 4, accelerating with compounding. At this stage, compounding starts to snowball. Portfolio, £75,000. Dividend yield 4% equals £3,000 per year, about £250 per month. If monthly contributions rise to £1,500, acceleration is faster. Also, investors can begin using covered call strategies for extra income, advanced but powerful. Diversification into global dividend aristocrats. Year 5, salary replacement reality check. Now let's crunch numbers. Portfolio, £100,000 to £110,000 with growth plus £1,000 monthly contributions. Dividend income, £4,000 to £5,000 annually. That's about £400 per month passive income. Reality check. With £1,000 monthly contributions, you likely won't replace your full £2,200 monthly salary in 5 years. But here's the good news. You've built a 6-figure portfolio. Your income keeps growing. By year 10, with the same contributions, you could hit £250,000 plus portfolio, and dividends could realistically cover £12,000 to £15,000 annually. Add side hustles plus compounding equals, salary replacement is achievable. The mindset shift. The truth is, replacing a full salary in 5 years with investments alone requires either very high contributions, example, £3,000, £5,000 per month, or a large starting capital, £200,000 plus. But the 5-year plan is still life-changing because you transition from being dependent on salary to having real investment income. You learn the discipline of saving and investing. You unlock financial confidence. Risks and realities. Market downturns. A crash could set you back temporarily. Inflation. If inflation runs 5%, you need more income to match salary. Lifestyle creep. Higher expenses make salary replacement harder. But with consistency and patience, the odds are stacked in your favor. Conclusion. So, can your investments replace your salary in 5 years? For most of us, probably not 100%, unless you start with big capital. But what you can do is build the foundation of financial freedom, where your portfolio begins paying you, your net worth compounds, and your reliance on salary shrinks every year. Think of this 5-year plan not as an escape, but as the launch pad. In 5 years, you could cover 20% of your salary. In 10 years, maybe 80 to 100%. And that's how financial independence is truly built, step by step with discipline. Now let me ask you, how much of your salary do you want to replace with investments? Drop your number in the comments. Let's see who's dreaming of 50%, who's aiming for 100%, and who's already there. Don't forget to like, share, and subscribe, because the truth deserves to be louder than the lies. Stay awake. Stay aware. This is Felix. See you next time.